Good evening, all. Ira Epstein of Linn and Associates with your metal market wrap-up, and this wrap-up is for Thursday, the 9th of December, 2021. Last night I kept saying the CPI report, I was off by a full day. I had been in a doctor's office for 4 hours for a series of tests and got confused. Not mentally confused, just got my days wrong. So everything I said yesterday is valid for today. What we really have going is you got to worry about, number one, what is the number? But more than that, the market's baked in already a high number, whether it's a 0.7 gain on a month or for the year up 6.8% or more. What's the difference? It's going to be a big number, and that's going to give the Fed the cover it needs to go into the FOMC meeting next Wednesday. The meeting starts on Tuesday, and accelerate the tapering. Why not? Unemployment, well, the employment job that the Fed has to do, we're at what? Full employment, if you look at it. We can't even fill the jobs. So you've got that. Their other mandate, fight inflation. Here's the spike. So why are they going to keep putting money into the economy? See, that's the dilemma. The dilemma isn't do they have to raise interest rates yet, because we're going to be worrying, gee, is this transitory? Not. The Fed said, nah, they got it wrong. A lot of people said they have it wrong. Okay. But as the supply chains fill up over time, we'll see what happens. The other thing we have to keep our eye on is Europe's about to get hit by this massive wave of Omicron. Now, they're talking maybe 1 million cases just in the UK. So you keep hearing these numbers. The question is, how serious does it get? Does it flood the hospital system? Are the people that are vaccinated protected? In the U.S., they now said 16 and 17-year-olds that have gotten vaccinations 6 months ago can get their booster shots by the FDA. That's what they came out. That'll offer some protection. So you do what you can to guard everything, but it's still going to be the CPI number tomorrow that rules the day. And how does the metal market handle it? It's going to be interesting. A lot of inflation, so you got two phases. Why isn't gold stronger than that on it? If you take a look at Bitcoin, it's been beaten up. I'm already reading people saying another 20% decline coming. That makes me think it's probably getting near the lows. At the highs, people get more bullish than they should. On a big break, they get more bearish. Just the nature of the beast. So when we take a look at gold on a weekly chart, we are down 0.42%, and for the week, down $7. Now, the key is to be closer to $17.90 if you're going to be bullish, and you haven't done that. When we look at the action, you can see that, number one, you don't have this big break in prices. For the past 2 weeks, you've had very, very tight trading range. The pattern is one of higher lows, higher highs, which is bullish, but the market is under the key moving averages, which is bearish, and you could get another wave of real bearishness if the 18-day average of closes in red were to start closing under the 200 and then the 100. Why? Because if it does that, you already have the 100-day average under the 200. If the 18 joins it, it's a classic bearish setup for moving average followers. You have then the lowest moving average, then above it the medium and the longer term. That's going to offer a lot of resistance and set gold on its butt. So what does it have to do to stop it? Out of nowhere, give you a surprise and get a big pop and get over 1801. That would be how you stop it. As for the market on the downside, well, the Bollinger Band at 1733 is a target. The resistance right now is 1793.40 to 1890, and you still have an embedded reading, so this market is still very much in the bear camp. I know a lot of elements are fighting each other with the swing line up, the bias down, but what rules the day until it's lost is the embedded reading, and until it closes over 21, the bears are in control of this market. When you take a look at the gold-silver ratio, you can see silver's losing the gold pretty big, and you can see it right through here. You have the embedded reading. The market is breaking down. Could be headed to the 2105 level if it wanted to attack a lower Bollinger Band. In the copper, this is exactly what I thought was going to happen. The market has gone from, let's review this, from the lower band to the upper band to the lower band, and now fighting the 18, the 100, and really the 200-day average. Everything's very close to each other on this chart. We have China getting ready for its big meeting where it sets its growth targets. This is where everybody comes in and you get their annual meeting set up, and they're probably going to do one thing. They're going to loosen things up now. They don't like how the economy is contracting, and that's why copper's gone into a pause. It needs a reason to pick up. It's fighting one headwind of COVID. It's got another headwind of slower Chinese growth. It needs to get something going, and that's why you're just meandering, if you will, back and forth here. In the platinum market, you tried to stick your head up, didn't lose the embedded reading. You got close and then fell right back down. So until it's lost, this rules the day, and rallies like this keep getting sold with potential targets. There's a window envelope target you have to pay attention to. I don't show it on these charts. I do that in my subscriber videos, and I give the window envelope numbers to all my paid subscribers. You've got to think of it this way. Some people like to think of it as a standard deviation from the 18-day average where you're looking for support and resistance. I do it different than that, and I teach that in my charting course, but the concept is the same. In the palladium market, you lost the embedded reading. It often is a sign that the market wants to rally back to the 18-day average and regroup from there. I don't see a trend here. I see a lost downtrend. In the dollar index going into tomorrow's report, the CPI number, you tell me, do you get more neutral than this? I don't think so. Now, I keep hearing, if you watch Bloomberg and you get a lot of analysts there, everybody's bullish the dollar. They go, listen, if COVID gets worse, you want to own the dollar. If the world's going to get better, which economy is going to lead the path? The dollar. So that's the thinking that they have if you watch all that, and that's something that I do pay attention to. What I think you're going to gear up on tomorrow is our market research, because we're going to write about what this is, the impact of it. If you were watching today in the grain market, we were all over that, because today was the supply-demand report. As it turned out, I don't think it was that important, but you never know with these. We're all over these markets all the time, and that's what you want. You want commodity people talking commodities. Where's the impact? If you do this in part of the market with interest rates, how's that going to impact the other parts of the market? Where's it going to carry the energies, the stock indices? Well, we cover all that. How do you get to see it? It's simple. Call my staff, have them set you up, or if you want to hide, go on our website under the keyword at the very top, which comes in with free offers. Sign up there. We'll get you signed up. I'm Ira Epstein. You have a great day. I can't wait for tomorrow. It should be an exciting day. Take care now.